Hello, this is Futures Trader from the EasyAlgo Discord community, and in this video I wanted to show you some tips and tricks that I like to use for using IndicatorX with TDIX to trade. Now, because this video is geared towards people that are in our community, I'm going to skip a lot of the basics. I'll kind of go over them and rehash them a little bit, but I want to talk more about how I use it and go over the tips and tricks because there's so much training material available to you if you're in our community that you really don't need me to tell you all the basics. It's all there for you. Seth has laid it all out, and it's excellent the way it is. But from my limited experience, which I'm gaining experience right now, I have learned quite a few little things that I'd like to point out that you may not have heard before, and just kind of tell you about like how I do stuff. And I like to scalp and take trades like this way because I can get into trades and make a little bit of money pretty quick if I need to. And that's why I use the 4-hour and the 5-minute. So I use the 4-hour time frame is like my bias for my directional bias, and then like I use the 5-minute for entering my trades. And just so you know, I just picked this random token or coin or whatever because it's new, or it's new to me, and I wanted to look at it too and just kind of do it with you as I do it, so you can see how I do this. So I have a split screen set up here with my 4-hour on my right and my 5-minute on my left. It's just the way I do it. Obviously, my color scheme and everything's going to be a little different. But I'll show you my settings and things, so you know, just in case you don't know like what settings to use. On anything pretty much below the hourly, I would be using a contraction swing size of 3 for your IndicatorX, and liquidity probably 5 and 5. And I'm only using the multi-bar master pattern. I have not selected 2-bar or 3-bar. I only use this multi-bar master pattern option, and I only have the major master pattern enabled. That's just the way I do it, and I make all my IndicatorX value lines white. It's just easier for me. I like the way it looks. So those are my settings. If you have questions, let me know. So it's 3 and 3 for low time frame, and for high time frame like hourly or 4-hour and above, even you want to use 2 and 2. So that's how I do that. Okay, so just kind of looking at this full screen, as you can see, there's only 4 value lines here, or sorry, 3 value lines on the 4-hour chart. Because it's relatively new and it hasn't had time on the high time frame to make these value lines. But look at how they move. It's just so classic, especially this one. Kind of like it had its contraction and then expansion or manipulation and then like a trend phase. But the truth is, if you're looking at a high time frame, like the 4-hour, I mean, if the candles are above that value line, it's bullish. If they're below, it's bearish. You know, just because of the fact that the 4-hour is a higher time frame to where these moves are bigger moves and higher percentages. So that's where you get your bias, like on the 4-hour. And how you do that is, say on the 4-hour, let's just do it on here because it'll link to it anyway. On the 4-hour, whenever your TDIX, zoom in on this, is this white line is your fast MA. It's like an RSI. Whenever it crosses above, especially immediately after it crosses above this middle band, which is this yellow line, like the edge of the money flow, whenever that crosses above, this time period is bullish until you get, a shark fin or a super shark fin. It can be bullish, and really it's bullish even as long as it's above. But when it crosses below that middle band or the money flow line, then it's bearish. So what I'll do when I get started, and I'm just going to show you how I do this from the beginning, is I'll take this line, vertical line on TradingView, and I'll mark it out. Like, okay, so it crossed below, it confirmed a cross below, and then I'll mark it here too. And I'll mark it red when it crosses down, and I'll mark it green when it crosses up. So this is, really how I do it, and how it's kind of done. So let's do this. Let's get here. Okay. So this is a pretty cool token here. If you didn't know, in trading in general, especially with crypto, some tokens are easier to trade than others. Some of them don't have much liquidity, and like the candles don't look that great on low time frames like this. Look at these candles. They don't even have many wicks. There isn't much liquidity. You can still trade it, but it's not going to be as smooth as something like this that, it looks better. It's easier to predict. Certain tokens are just easier. Because some of them will have total scam wicks that just go up and down like in crazy percentages to knock you out of your trade, or try to liquidate you when the market makers do stuff. So this one, I've just been keeping my eye on it because it's new and I seen it moving one day, and I just think it'd be an interesting one to try to trade. And it really doesn't even matter what you trade with these easy algo strategies. As long as you follow the rules, you're going to be profitable. If you know what you're doing and you follow the rules, you're going to be all right. So as you can see here, I got a red line where it crosses downward, and green when it crosses up. And so now I'd be looking for shorts in this bearish sentiment and longs in this bullish sentiment. And then I just go down and I start looking at the 5-minute for my time frame for my entries. Now there are a couple other things on here to keep in mind. Like the higher time frame value lines act differently than the low time frame value lines. So like when you're on a higher time frame, especially like 4 hour or above, you would actually be looking for longs when the price is above that value line, or shorts when it's below. So not only do you have the confirmation of the sentiment, where it's bearish or bullish sentiment when the fast MA crosses the middle band, you've also got the value line, because these moves on the higher time frame are just so much slower but bigger moves than the chaos of the low time frames. So what I'm going to do is I'm going to start back here and just kind of go through it and then show you, some things, how I would do it, and just kind of hopefully remember all the tips and tricks that I wanted to bring up when I was thinking about making this video, because I'll try to remember everything, but I don't leave notes, or I don't have a script or anything. I'm just kind of doing this on the fly because I didn't have a lot of time, and I just kind of wanted to get it done finally, because I just kept meaning to do it, but I hadn't been able to, and I hadn't got around to it. All right, so on here, you're looking for shorts because the high time frame is bearish, but on the low time frame, you're basically counter trend trading, and you're trading kind of with the trend on the high time frame is what you're doing. But on the low time frame, that's where you try to enter on like a counter trend kind of. So as soon as you got this red line marked where, okay, it turned bearish sentiment, I'm going to be looking for the price to go above the value line with a shark fin for a short. And so that's right here would have been a good entry, but it's also really good to kind of wait until the shark fin curves down. And you want to be kind of particular about when you enter on these shark fins, because this shark fin is so close to the middle line here, the 50. that's not an ideal shark fin. You want to get shark fins that are deeper, like are higher for shorts and deeper or lower for longs. So this is a risky shark fin to enter on. It's risky on this one, but you could trade it technically, and you just take profit like quick. And usually you would have a shark fin, say, like, just as an example, like way up here. It's not one here, but like up here or something. Like sometimes you'll have a shark fin, like say there was one here, and you would take your profit when the price hits the value line according to the strategy, or one of the liquidity lines, which I have marked on here. But in this case, if you would have entered this trade, like, you wouldn't have got very much until it hit that value line. But this just so happened to keep going down a little further because it wasn't bearish sentiment on the high time frame. However, like taking this one, not being that far, above the value line, wouldn't have been very profitable to take it and then exit right here. So, you could watch it as like, if you're going to take one that's that close. Sometimes when they're that close to the value line, they turn out to be really good trades. So you can't rule them out, but you want to watch it really close. And, make sure you check your TDIX for your fast MA to cross below your slow MA and stuff like that. And, you want to check all the things on the TDIX oscillator. If you're in a short and then it goes down and hits this liquidity line here, like this green line, you should take profit. You really should have taken profit like here, or at least some profit here. But I would have, like, because I'm more experienced, I would have just held it. And not only that, like, I personally use moving averages, and then like when like it starts to cross like the moving average, then I'm like, oh, okay. Or I have a moving average cross, then I'm getting out. Because I can kind of, once I'm in the trade using IndicatorX with TDIX, then I can use moving averages to kind of help me gauge when I could get the most profit out but be safe. But I want to focus on the easy algo indicators and not the moving averages in this. So with this, your liquidity lines are great for taking profit or entering trades. So like if you look at this, you had it hit this liquidity line, and almost immediately you had a reversal candle pattern that reversed, and then you had a like kind of a dump. This would have been an excellent trade right here because it took liquidity and then it kept going down. So like you can measure it, and like say if you right here when it closed, like you could have got in, like when you seen this wick on this candle, you could have been like, oh, it took liquidity and it's got a inverted hammer candle. That would have been a great entry. And then you could have taken all the way down here, and so you could have got 3.44% in like an hour and a half, which at 10x, that's great. That's great. If you had $1,000, you just made like 340 or something. So because it would have been like 34% at 10x leverage. So right there's a really solid trade. And you're basically going to keep doing that. But if you trade, someone told me this, they taught me this in the community, if you trade super shark fins only, you're going to get better results by far. You can trade these other shark fins, but watch them close. Make sure you're ready to take profit. Make sure you got your stop loss like ready to be pulled into the green or pulled up to your break even after you're in the green. So like if you entered this trade here, like waiting for it to close, like right here, if you entered like there, you wouldn't have got as much. It wouldn't have taken long. 2%, that's pretty good in like 20 minutes. At 10x leverage or whatever leverage you use. But as soon as like you're in your profit, like you could just move your stop loss down so you don't lose anything. And so that's really smart to do that. Especially if you're wanting to like not take profit at the value line and you're hoping price goes down on one of these liquidity lines or something, which is risky, but it happens a lot. And it's not a bad idea to take like half of your profit like when it hits the value line. So as I'm watching this here on the high time frame, I'm kind of looking at it at the same time. There was a bearish divergence on the 4 hour, which is really good news if you're looking for shorts. And so as like you had a few trades here since it turned bearish, like 1, 2, 3, and really, one, if you wanted to just take the super shark fin, boy, that was a great entry right there. But then like what happens here is as the price goes down, it's getting closer to this 4 hour value line. That's when you really want to start to watch it, because price will interact with these higher time frame value lines. So you want to watch when that happens. So you could have taken all kinds of entries here. But like what I do is like, say you have something like this going on. This is just me. I use like even just like what is it, the 8 MA, the 8 SMA, which would be my white line. So let's just kind of look at this white line here and say, okay, I had a shark fin right here. If you pair this with an MA, it helps. You have a shark fin right here, and it's a nice sharp shark fin for a short and a bearish sentiment. But look, with the 200 became like a little support right here, because this red line's a 200 SMA. So what I would have did, like I said, okay, well, this is kind of weird. So I kind of watch these, and sometimes I wait for price to get under the SMA as well. So like I would say, okay, well, here's the shark fin, but I mean, even entering here would have been kind of risky. Let's see, for a couple reasons. Because also like you had this RSI here, the fast MA was starting to move up a little bit. And plus, like if you're watching the moving averages, you would start to see like that the 200 was below it, and there was a possibility for it to try to find support or bounce on it. So you don't want to just kind of limit yourself. You can trade this system. You could have technically traded it without any moving averages. I like to use the moving averages along with it, but you could have traded this like right here. You could have entered. I mean, this candle set up here, you could have got it, or you might even have got stopped out if you just wanted to let it go and hit your stop loss. But if you like take your stop loss and pull it into the break even as soon as you're in the green, you can avoid like having your stop loss like hurt all the time. So that's a really good thing to do. But what you can do too, like, is just on the low time frame as well. Watch how the price interacts with the fast MA and the slow MA interact. But this kind of thing here, like this is going to happen when you're trading. But if you would have waited for a super shark fin, you probably wouldn't have had that happen. It would have been a lot less likely. So that's another reason, like some people say, just trade the super shark fins, especially when they're high and they have these crossovers at these overbought and oversold levels. So I'm hoping to see some other things pop up as I scan through here to see if I can show you some of the other things I have in mind that I want to show you. Yeah, so I'm looking for shorts here, and price is getting close to the value line. So I know there's going to be some sort of interaction with it. And this here, it kind of looks like it was tapping on it. But when you look on the 4 hour, it's showing wicks or shadows on the bottom. So it's kind of, you know, showing you that there's a potential for a bounce on the 4 hour, but it's still in bearish sentiment overall until it crosses this yellow line over here on the right. But like what you can keep in mind too is watch, like as you're trading, like anytime this fast MA could try to cross up above the slow MA, and when that happens, you're going up. If that happens on the 4 hour, if that crosses, you might want to be more reserved about, you know, you entering your trades or making sure you take profit quick. You could still get them with this setup. It's like almost like I don't want to say 100% win rate, but it's a very high win rate when you trade like this. Say if you're looking for shorts and bearish sentiment. But what I find is when you have the high time frame, say cross in the bearish sentiment, you're going to get your best trades when the crossover is fresh. You know, like if you like are finding shorts all through here on the 4 hour, and then you get, you know, a shark fin. It's not in this case, but if you get a bullish shark fin down here, you probably on the high time frame, if you get a bullish shark fin, you're not going to be wanting to really look for shorts anymore. So during this time period, like from this crossover down to here, you're looking for shorts, preferably when the white line is even below the slow MA as well. So that helps. But you know, if you look on here and you got a nice shark fin like this one, sure, you could easily take in that trade. Like the shark fin closed right here, and you could have taken it right down to the value line easily and made, you know, 2.5% or whatever. And, you know, a few minutes, like 15 minutes. But you want these shark fins, preferably super shark fins, or at least ones that are up high if you're looking for shorts. And as I look through here, let's kind of see, I'm trying to look for certain scenarios. Something I want to notice or show you too on this time frame. Let's hide my drawings. There we go. You'll notice sometimes that like price as it moves up, like it's not going to hit the lower liquidity. So when you see price moving up to take out liquidity on the upside, like, you know, it's still in an uptrend. Like it keeps taking out this liquidity up here. It's probably going to go for it right here. It looks like it's going to go up here after it again. So you can kind of see the trend, the overall even higher time frame trend when you're seeing that happen, when it's not touching liquidity on the downside or upside, depending on which way you're going. And another thing is, like, if you get into a really good trade like this, you'll see this too. You'll kind of see almost like here on the 4 hour, you'll kind of see like a sharp movement of the fast MA, like a shark fin inside of the Bollinger Bands. When you see that and then a crossover like that, that is a really good sign, especially when it rejects right at the value line. It's like it tries to get into bullish sentiment, but it couldn't. But that tends to be a very good entry when you see that rejection right there. That is a good entry. So on something like that, if you catch something like that, like a rejection when it tries to go bullish again, you know, something like this, if you would have got in on this super shark fin, like you could have held it. You could have held this. Say like right around here somewhere you would have entered. You know, if you were kind of ballsy and held it. I mean, because it was above this value line, you could have, you know, you could have took that short. What I find, this is this instance I wanted to bring up too. And by the way, you know, like if you see that on the high time frame, you know, you may be able to take it and hold it. If you're using like moving averages, you may be able to hold it way down and just keep holding it for a while. And then once you're far into the green on your trade, make sure you take profit. But also, like what I do, like sometimes I'll change time frames after I'm in the green and I know like my entry or my stop loss isn't going to get hit. Then I'll hold it, and I'll start looking at the higher time frames for confluence to see if it's going to continue downward. Like I'll look at everything from, enemy shark fins is what I call them. Like if there's a bullish shark fin occurring when I'm in a short, it's a good sign to get out, but especially divergences. But also, like, you start looking at the money flow, because it's even slower than the slow MA. It's slower than these divergences. The money flow is like the slow but solid indicator of what's going to happen eventually. The money flow is a great tool. A lot of people, I think, underestimate that, and that's something I like to use a lot too. But and you'll notice that, like, even if you've seen if this was a shark fin on the 4 hour, like, or even the 1 hour or something, and you would see it would look something like this on the 5 minute. So you're basically getting in on the higher time frame shark fin essentially, but you're getting it in on the lower time frame. So these little movements aren't very much. Like if you go in the red, if you have a little drawback for a little bit. Say if you entered here and then you set your stop loss up here or whatever. Say something like that, and you set your stop there. You could have held it, or initially you would have wanted to hold it here, but then this is what I wanted to bring up. Like you seen this happen where it started to go up, and probably would have made you feel uncomfortable as it kind of got close to your break even, but then it rejected again. Well, if you were holding it, if you would have pulled your stop to break even, then you would have got stopped, but you wouldn't have lost anything, but you just wasted your time. But in this case, what happened was if you were in the short and then a new value line appeared, well, at that point, that you're going to want to enter a trade when it's only above a value line. So when you have a value line like here, and if you entered a trade up here and then a new value line appeared, well, you have to reevaluate with this new value line. The other ones, they're still good, they're still valid, and price will like react with them. So many times, like this one over here, it was resistance. This was like resistance in a way. But so you just want to make sure that you reevaluate what's going on when a new value line appears and you're still holding a trade. So, and this is kind of weird too. In this case, it didn't turn out, but sometimes you'll see these little tiny shark fins, and I know this is so strange, but especially if they're up high, but sometimes I see the biggest moves happen on these tiny shark fins. It's as if price was just struggling to try to get above that value line, and then it just dumped. Not in this case, but I've seen that happen so many times. But look at this. I mean, this is IndicatorX. You need IndicatorX, to tell you really which shark fins are good, or if you're shorting at a premium, which is what you want to do, and if you were longing, you want to long at a discount. But you don't get every trade like this one here. It wasn't above the value line, so this shark fin here, you wouldn't have taken it. But potentially you could have held this even and took profit down here when it hit this liquidity. So yeah, that's pretty much how you use it, obviously. But I wanted to show this too. Okay, so here is like right here on this. I'm just gonna kind of go like that, and what is this? All right, so I just drew this line because this line is right where the 4-hour value line is. And what this is how you find the sweet spot. So now when you're looking at the 4-hour and price goes below that 4-hour value line right here, you really want to be looking at shorts because it's below it, and even one candle going down will be a big move on the 4-hour. But you look at the 5-minute and you start looking for shorts under this, and this is the sweet spot, like right here. It's not even a super shark fin, but that's the sweet spot. And there are other sweet spots here, I'm sure of it, but like that right there is like a choice entry, because like what that is like that could have been your entry that you might have wanted to hold like until like way down here potentially, because this big move on the 4-hour, it's just huge. And so price is traveling away from the 4-hour high time frame value line, but you got a sweet entry on the 5-minute, and that is like your sweet spot. But there is an issue here. There's no value line. But there's some here. These are good sweet, actually better sweet, technically speaking. These would be like sweet spots because they had shark fins, especially this one. Tiny little shark fin like I was talking about right here. That would have been a good entry, believe it or not. But like on something like this, you could have also kept in mind, like, and I like to glance back and I'll like hold like my cursor over and it'll show a line, and I'll line it up with the previous value line, and I'm like, price is interacting with that previous value line. Like it couldn't even get to it. So like there was a lot of signs here that it was going down. I mean, you had your shark fin, and then it crossed below the slow MA. I mean, this was slow too. Like this gave you like time to enter. When you've seen this too, this is another key, is this white MA going below the green or the slow MA. So that still, I probably would have taken that. You're not really supposed to enter like technically unless it's above a value line, but I think shark fins are a very good confluence. In this case, I probably would have checked like volume or my moving average ribbon, and I'm sure there's something here showing me like, yeah, like it was struggling to get above this 50, the blue line, and then like as soon as it dipped below the 8, it was just on. But here's actually the best sweet spot. I mean, any one of these really, but they don't all play out exactly the way you would want. And there was a lot of sideways action here that would have been really kind of boring and uncomfortable to trade. But if you would have held it, if you would have followed the rules and you would have entered above the value line, you know, here with the shark fin, right there, and here, and right here, this one, like right here, oops, it's even a new value line with the shark fin right there, and that's a nice candle. So like this would have been a choice entry for other reasons too. Like it just tapped the liquidity line, and then you had this inverted hammer candle twice, like showing you like it is rejecting and not able to get above. And like if you would have held it, I mean, you could have took profit right here at the value line, but you could have taken profit down here. But if you were just wanting to see what would happen, well, in this case, like it happened and you got this big drop. But if you look at it in really close, maybe, you know, you could look at smaller time frames. I don't like going below the 5-minute too much, but sometimes I will. Oh, rats. I think it just moved where I was at. Nope. Okay. Yes, it did. Oh, I forget that it wanted, every time I change the time frame, it does that. And I lose my place. Okay, anyway. So I was right here. It wasn't very volatile here. But I bet you if you went down on a lower time frame and looked at this, there would have been entries. maybe like the 3 minute or something, maybe even the 1, but I don't feel comfortable like on really low time frames. There's just too many false signals on lower time frames than the 5. But technically speaking, you could have taken this trade and also, and look at this, look at how contracted this, the Bollinger Bands is. So that's a really good sign that a big move was coming. And because it was still in bearish sentiment, you should have been bearish. And not only that, all these candles here are showing wicks on the 5-minute value line. And this one tried to close above it, but couldn't even close above it. So when you're seeing something like this, it's like pressure down. It's like it can't get, price doesn't want to get above. People don't want to buy above this price. So this right here, this tiny little shark fin like I was talking about earlier, you could have entered on it. You know, if you really wanted to do it, you could have. And, you know, you could have looked at these other signs, like how price interacts with the value line, like I'm saying. And then, boom, you had a super dump. And that would have been tremendous. Like, you could have held it for a while, but, you know, I don't even know where you would want to take profit, but let's say you entered on somewhere around there and you held it. If you would have held it to here, you 3% in like an hour, 3.8, that's pretty good. But when you see a dump like that too, chances are it's going to keep going down, and you want to start to reevaluate on your high time frame when something like that happens to see, you know, if you have a sign that it's going to keep going. Let's see, which I would also look at the MA ribbon, and there we go. The 200, it was rejecting on the 200, and basically this entire ribbon was starting to turn bullish here, the ribbon, but then like right here it flipped bearish, and then it stayed bearish. And right here you could tell, like, too, this was such a choice entry too if you would have got in here. Like, it's you have like a bearish ribbon flip, like everything here is bearish, like with the white on the bottom. So using moving average ribbons are excellent with this, because it just reveals so much more. And that's the way I do it. Not to say I win all the time either. You know, my stop loss gets hit like everyone else's. Like, watching it and back testing and looking at this stuff is one thing, but actually trading is another. When it's playing out, you know, you have to be patient and trust the TA. You have to kind of wait and see, you know, is it acting in accordance with all these rules, like, and what's supposed to happen. So yeah, that's pretty much it. I could go on and on with this, but just look at this. I mean, like right here, you had this super shark fin, and it was bearish. And it technically would have hit here. Say, if you entered on that, let's see how close that is. It's still, well, I don't want to say that's in the sweet spot. It's too far from the sweet spot. But you would have targeted this line, but it didn't make it there. And then eventually, like, you had a new value line like appear, so you wanted to reevaluate. But the cool thing is, once it appeared, then you had another shark fin, another bearish shark fin right here, and then you had another major dump, and then it turned bullish. So that's how simple it is to trade like this. And so now you have your bullish sentiment, and it's like the opposite. But it's so simple using IndicatorX with TDIX. It's not that hard to trade like this. Once you learn how to use it. So now you're in bullish sentiment, and I'll just go over some things at first. And like, you could have taken this, but once again, it's not very deep. Like, you want a deeper shark fin, preferably a super shark fin. But you can still take those. But this is a good sign when you see price going down to like after you would have taken this shark fin, instead of taking profit here to hit the liquidity line, you could have gotten that. But like it came down and started bouncing on top of it, and it wouldn't get below that value line again, which is a really good sign that it's going to continue up. Here's something I want to bring up. I'm sure I haven't even looked at this, but I'm sure if I put my moving average ribbon on, then you'll see here that this here shark fin, it's not a classic shark fin. It's not sharp, but like it wasn't like as great of an entry. Not only because it wasn't sharp, but I would have waited until I seen it. Like if it was kind of like dull like this, I would have waited for more confluence. Like I would have waited for price to get above this 8 SMA. I wouldn't have entered here because it could have kept pushing down. It could have happened when you have one like this. Like even here, like it shows you things you want to watch out for. Like when the fast MA starts to curve down like that, while price is kind of going sideways. So I would have been like, well, I'm checking my MAs, and then if price gets above it, like right there, you could have entered here for your delayed shark fin trade, and you could have taken it to here. That would have been according to the rules 1%, but like I'd almost never take all my profit at the value line. Sometimes I do, but not always, not that often. I like to leave it run, or at least let some of it run until it goes further, and then I move my stop loss up to break even or in the green a little bit. I'm a risk taker, kind of, so it's just how I am. But, there's something to be said for these small gains, these 1%, 2%, 3% and stuff. But when you have these, you have to realize that there's so many shark fins in this process. Like this just crossed into the bullish sentiment on the high time frame. So, here's your super shark fin. And really, this is cool too. You'll see this a lot too on these reversals when you change from bearish to bullish sentiment or vice versa. And you'll have this, say like this would have been your, like a little demand zone. And look at how that tapped right into it. I love pulling these. Like after I get a shark fin, to like pull them and see like if price comes back down again to tap it, because those tend to be really good entries. And also, it didn't even have a shark fin here. And that's another thing too. Like if you have a shark fin like this, and then you don't have like a big move on a super shark fin, price may go up, find some resistance and come back down. But if the price would have came down here a little lower than this low, if price would have came lower than this, and this RSI was up, you would have had a bull div. So if that would have happened, it would have been even better than the super shark fin. So sometimes you will have that. I don't know if we'll see them on here. They do occur. But anyway, when you get these super good entries, like, I mean, if you leave some of your trade to go, it may keep going. And, that's something like that I didn't do. Like I wanted to hold my entire trade for something like this. But, the reality is you never know when it's going to reverse. You could have a dump all of a sudden. If you don't take profit, you're going to get round tripped eventually, or most of the time. And look at how much time that took. Like that's like almost 2 days. And do you really want to hold a trade for 2 days and be worrying about it and thinking about it? Why would you hold a trade that long? Believe me, I've done it and then regretted it. But when you could have taken like all these other entries, like all these other shark fins, you could have potentially taken, you know, trades like all of these, like here, and if like even this one, because of the demand zone, you could have taken any of these these shark fins and had good entries, you know, and it would just keep going, like take profit at a like a liquidity line or something, wait for the next shark fin, get in, take profit at the next liquidity line. And you know, in this case, the price during this, price was just starting to get above that 4-hour value line. So right here, and here, especially here, that's a beautiful shark fin. This is the sweet spot. You have a nice, sharp, jagged shark fin right above the high time frame value line and below the low time frame value line. So you want it to counter trend trade on this 5 minute. So that is like a sweet entry. That is so good. And that's why it's called the sweet spot. Something like that, you know, I would be more inclined to let it ride for a little while and see what happens. So that's pretty much it. Like I could go through this whole thing, but you need to go and look at this and back test it yourself and see, you know, look at different coins and see how they react to it. I think I covered most of the things I wanted to cover in this. You know, just keep in mind, like if you're in a trade, and then a new value line appears, you need to reevaluate. And just to kind of observe like everything that's going on. Because all of these lines and everything, it's not to confuse you. It's not here like trying to give you analysis paralysis, you know. This is your chalkboard. You know, if you're going to trade, like you want to look at every line and see what's going on and how it reacts when these things happen. When you have these rejections at, you know, the sentiment line or the middle band. Like in this, here's an interesting case too. This is a nice little bear div, like on a 5 minute, and believe it or not, a money flow bear div. These like play out pretty nicely too, at least here. So like, especially if I have like a bearish divergence with the money flow or bullish, these kind of trades, like when I have a shark fin here, and then like I would put on my moving averages, and then I would have been entering like right around here. Instead of entering here, I would have like, because I know a lot of times these divergences don't play out immediately, and they push and push until they finally play out. You know, you could have technically entered your trade like here for a short, and that would have been sweet. But you know, even if you entered here, you could have got stopped and re-entered, or I probably wouldn't have entered there, because I know in situations like this, it's probably not going to go down yet when you have shark fins that look like this. But I would have entered once the price got below this 8 SMA. So you had your shark fin, but then like if you waited to enter like right there, and that would be red. So whoops, especially with the nice wick on the upside like that. And you can see, you know, how it's reacting to that SMA, and it's staying under and it's pushing it down. So don't underestimate using pairing this with some moving averages. You might get some good results. But yeah, that's how I do it. And if I see a money flow divergence, whether it's bull or bear, I have more conviction, and it gives me more confidence. I got more confluence. So I would hold something like that longer. But in this case, you didn't need to hold it very long. That was a very nice trade to the value line. Let's see what the percentage was. Say if I waited for this to confirm underneath or one of these. see, even if I entered like here and I waited for the value line, that was 3.65%. That's pretty good. And something like that, as like it's going down, I would be watching these and I'd be like, okay, it's under the 8, but then like you had a bearish MA crossover as well. So like once you start getting all this ribbon flip bearishly, like you could have technically held it until it got above again, but in this case it did blast up pretty hard. So it would have been wise just to take your profit here. But in other cases it'll keep going. So yeah, that's that. And remember, like if to watch your high time frame, because like here, oh, that was like where it happened. You would have been looking for shorts, but like you had this like high time frame. Fast MA was above the slow MA. I mean, for all you know, it could have went up higher, and maybe even crossed above it again. It was unlikely with a bearish super shark fin starting to play out, but it could happen. So you don't just want to watch your 5-minute, you want to watch your 4-hour too, because things change. And these little lines will move as it prints. As the price goes up and down, this line will move before your eyes, and depending on how big it is of a movement. But yeah, that's pretty much it. That's how I use this, and I love trading like this. It's my preferred way to trade. It's easy for me. I don't do too well with TrendX. I just, the super narrows and stuff, it's kind of a nail biter for me. It makes me wonder if it's going to blast through in the opposite direction. But I will pair these together and also sometimes use TrendX. It's messy. I'll often use TrendX for stuff like this too. And that's one thing I didn't mention yet. But I'll turn on my TrendX, and you'll have stuff like this. Like sometimes I'll turn it on and I'll look, and you'll have like levels marked for you with your TrendX, and you'll see stuff like this all the time. You'll see reactions to these levels, obviously. So yeah, I hope this video was useful to somebody. I wish I could have got it a little shorter. I don't like to make videos that are too long, but if you have any questions or anything and I can help in any way, just message me in the Discord. And if you are not a subscriber to Easy Algo Indicators, then what are you waiting for? I mean, this is just one way to trade with Easy Algo Indicators. I mean, there are so many ways to trade with these indicators set. I mean, you've got TrendX, you've got IndicatorX, you've got your TDIX, you've got your Imbalance X, you've got, like, gosh, there's so many cool indicators. And your ScannerX helps you. I don't really use like VWAP-X. I don't understand it yet. ATRX is okay. And then there's SMCX, which is something I'm currently learning. I've just been so happy with IndicatorX, and really TDIX the most happy, but I've seen so many people getting really good results with SMCX, and it's the people that really learn it, and with the new EAX tool, it's pretty amazing from what I understand. Excuse me. So that's my next goal, to fully learn this. I'm still watching the training videos for that. But yeah, so that's that. And I hope you have a great day today. Thanks for watching.